Welcome to YouTube, non-gang members and gang members. I'm going to give you an update what my take is on the market, what's going on. And as you know, the market is really just stalling out. We had two rallies, and the only stimulus was the first was the 286,000 June job number, and that moved the market up. And then we had this recent job number here last Friday that moved the market up. But this is not sustainable, okay? Now, you're going to listen to this. This is unbelievable. This is Bob Pisani. He's a real cockroach from CNBC, a real parasite. Listen to what he says.
Now, for everybody wondering why we keep holding up so well, there's several reasons. Number one, the U.S. economy, whilst choppy, is still among the best in the world.
That's not why. He's lying. The reason why the market is holding up so well right here, we call it a steel I-beam pattern, is because, one, the hedge funds are still buying their own stock back. So that's forcing the market to stay here. Two, okay, CEOs, okay, they're still buying their stock back, doing stock buyback. And the hedge funds, too, are still short covering their positions, okay? And Aunt B is still purchasing bonds. So she can print money, and she's buying the 10-year treasuries. So to force the countries who loan us money or who buy our debt, like the Saudis and Chinese, out of the stock market. So here's your stock market right here. And out of the bond market. So they're getting a 1.5% yield or interest on the bond market on a 10-year treasury. That's not very good. So what Yellen does is she goes and she prints money right here. She takes the old printing machine, see right here, and she just keeps printing. She prints and prints and prints all this money. And when she prints that money, she goes in and buys treasuries. Right here, she buys these treasuries. What does that do? That drives the treasury market. The yields go down. Okay, the yields drop, right, like that, 1.5, 1.3, as the bonds go up. But what happens is the countries who buy our debt, okay, they want interest, and they buy our debt, but they don't want 1.5%. So up here, the S&P will give us in dividends 2.5%. So by printing money, buying the treasuries, which drops the yield down, then everybody like the Chinese and Saudis get out of the bond market and they buy stocks. And that's what's holding the market up. That, besides the continuing stock buybacks by CEOs, the hedge funds covering the short positions, and we've had 5 quarters of negative earnings growth, and you think the stock market would be collapsing because of that. We got negative earnings, plus, don't forget, our trade deficit keeps growing. That's cost us millions of jobs. You think the market would be dropping, but no. These reasons I just gave you are enough to keep this market up. It's not sustainable, but yet, and they're going to have to come in and do QE. That's what's going to happen. So they're going to do quantitative easing. They're going to come in and do QE. What does that do? Well, that's going to push the stock market. Let's say the market was doing this here. Let's say this was the market right here. So the market was going up like this, stopped, and it stalled right here. For the market to continue going up like this, QE, what it will do is they'll start printing money, and they'll print about $5 billion, okay, to give to big companies to buy their own shares back. They'll print another $3 trillion to put directly into the stock market to keep pushing the market up. So you got your $5 trillion on stock buybacks, that'll go up. They'll print $3 trillion, put in the stock market, that'll push the stock market up. And then they buy the Treasury, prints money, and buys more treasuries to drop the yield to make it even more unattractive, maybe drop it down to, who knows, maybe 1.1% to keep forcing the Chinese and the other countries into the stock market away from the bond market. That's how they're going to get this market to move about 30 to 40% between now and November so that Hillary will win the election. Okay, that's what's going on right there. This market should have dropped already. This market should have turned around and gone down. Since last week, we should have gone down at least 2,000 points because, first of all, it's overpriced. We got multiples of 19, which means the market is at nosebleed levels. It's not, you can't sustain a market with multiple of 19 when you got bond yields at 1.5, 1.1%. So that means that this market right now is being totally held up right here by the reason I just gave you, and we need to have the QE drive this market higher. We have never had such bad numbers, economic numbers. I mean, our numbers are just deplorable. Between our economic growth, it's been averaging 1%, which is only really giving us 85,000 jobs. They lie to us and say we had 250,000 jobs, but remember, of the 250, 85 from 255, I don't know, let's say it's 175,000 is fake. Those are fake numbers, okay? That's the birth, death metric system that's fake. They decide how many, they do assumptions as to how many new businesses they think have started. I don't know how they can do that when businesses, we have the worst. We have never had so many businesses, so few businesses start in this country. I mean, it's embarrassing. We pride ourselves on small businesses starting, and we just don't have any new businesses. And it's critical for the economy to grow. You need new businesses for the economy to grow, and it's not happening. So, because first of all the regulations, you can't, and we can't get money. We can't give money to small businesses because why? Because the government, okay, is taking the money at 0%. So you got the government taking the money at 0%, and you got Wall Street taking the money at 0%. So there's no money left to build our roads and bridges and infrastructure. So that's why we're not creating jobs, and we don't create jobs. We don't have no productivity, and it's productivity that drives our economic growth. So if you have economic growth, you create jobs, and then you have productivity, which creates our standard of living, and none of that is happening. So everything is lagging. So that's why we're going to get QE. So that's why it's important for you, if you're not a gang member, why don't you check it out? Go to philsgang.com. Check out my MV2 chart, which is so easy to use. All it does is tell you when to get in and when to get out. Very easy. You'll love it. Just to give you an idea, right here, when it's red, it tells you not to get in. When it's green, it tells you to get in. And it'll turn red again when it tells you to get back out. So easy. It is so beautiful. We have thousands of gang members who use the MV2, especially if they're very, very busy. Here, I'll give you just one idea right here, just to give you a gold stock that we did using this. AUI. You go back on AUI, we caught AUI right here last year, November, December. I'm sorry, this is February here, February on AUI. And just because it went from red to green, we bought it, and we got out up here. So this little bit right here was about a 40% gain from here to here. Then you could get back in from here to here. That was about 30%. Okay. And the beautiful thing is when it turns red to get out, you can short it, make money on the way down, okay? So, but we always tell people start first just trying to make money when it turns from red to green. This is a beautiful thing. You can join a gang for $30.95 and get use of this, a $24.95 value. Get that comp to you for just 4 weeks while you are a gang member, okay? Then at the end of 4 weeks, if you want to keep it, you just keep it, and we'll just start billing you, okay? All right, that's about it. So I hope you enjoyed this. I will hopefully see you all on the charts and hope you become gang members.